Hello. While what triggers an audit seems a mystery, you can do some basic things to reduce your chances of being picked for an audit and make future interactions with the IRS less traumatic. 1. Don't claim questionable deductions. Don't be scared to take deductions and losses you're entitled to, but don't take tax positions you aren't genuinely comfortable defending. You can't predict the trigger of an audit examination. Always go for the reasonable approach. 2. Account for every Form 1099. The Form 1099 comes in wide varieties, including 1099 INT for interest, 1099 DIV for dividends, 1099G for tax refunds, 1099R for pensions, and 1099 miscellaneous for miscellaneous income. Payers of such funds send these forms to you, and the IRS. So regardless of how many 1099s you receive, ensure complete accounting on your return. There are also Forms 1098, which lenders send to you and the IRS, recording how much interest you paid. The IRS matches your return against the 1098s and 1099s. If a Form 1099 is wrong, say it reports more income than you had, you can explain or deduct it on the return, but you must first register it. If your return is complex, you may need to add explanations or disclosures in the footnotes. 4. Disclosures while being made on regular paper or special IRS forms. Tax return preparers distinguish white paper disclosures from those on IRS Forms 8275 and 8275R. A Form 8275 disclosure statement on plain paper to disclose something not found on the other forms. Form 8275R, Regulation Disclosure Statement, is for disclosing positions contrary to IRS regulations or other authority. Do not file Form 8275R or take a tax return position without professional help. 5. Assemble your return correctly. Follow the IRS instructions for assembling your return. Usually, this means the return itself, followed by schedules in alphabetical order, ancillary forms in numerical order, and plain paper statements and footnotes at the end. Attach Forms W-2 where specified, but don't attach forms that are not required, such as 1099s. 6. If you receive a small bill from the IRS, pay it immediately. If you follow these steps, why should you pay a bill if the IRS sends you one? It usually doesn't pay to fight with the IRS, so if the tax bill is small, don't get into the system and risk more significant problems over a few dollars. But at least consider the possibility of paying a tax bill unless you are sure you're better off contesting it. 7. Don't amend without thinking first. The flip side of paying a small tax bill is not amending a tax return to get a small refund. Amended returns, more regularly than initial returns, are audited. If you forgot a deduction or think you can get a small amount back, think twice before amending your return. 8. Don't ask for your money back. If you are entitled to a refund, consider applying it to your next year's tax payments rather than requesting a refund. You'll have a lower profile if you file a return applying a whopping refund to estimated tax payments for the current or future years. This logic applies to both initial and amended returns. In closing, no matter how careful you are, there's no way to guarantee you'll never have a tax problem. While audit rates for most tax returns are now at historic lows, IRS enforcement efforts are on the uptick, particularly for upper-income taxpayers. Thank you for watching.